Good evening and welcome to the January 10th, 2024 edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. My name is Dr. Tisa Silver Kennedy, and I'm the founder and executive director of the center. And I thank you so much for joining us this evening. Before we get into office hours, I just wanted to tell you a little bit about the center, our mission and vision, and then we will get into the questions that have been submitted by our community. So the Maryland Center for Collegiate Financial Wellness was founded in 2021 with an ambitious mission for all college and career school students in the state of Maryland. And that is that they will all have the opportunity to achieve these 6 pillars of collegiate financial wellness. Those are being creditworthy, ready, resilient, empowered, successful, and thriving. If you'd like to learn more about the center, our mission, vision, and our programs, please do visit us on mccfw.org. Also, if you'd like to support, there's a page, mccfw.org/support, so that you can make donations, share your success stories that might have been helped by the information and resources provided through the center. Before I answer the questions, I just wanted to make sure that we are clear about a disclaimer and that the information presented during office hours does not constitute personalized financial advice. It's for informational purposes only. We do our very best to give you the most accurate, up-to-date information, but if you've been with us for a while, you know that a lot of changes have been happening in a very short period of time. So sometimes it's hard to keep up. But either way, we do our best to give you the most accurate information and really to help you take a look at what's happening in the larger space of student loans and see how it affects your individual circumstances, including your loan portfolio, your household finances, and with all of that considered, then we believe you can move forward to make the most informed decision about your student loans. So now that we've got out of the way, I think it's all right for us to jump into our questions for the evening. So our first question, let's see, it is about public service loan forgiveness. It's who can sign my PSLF application? My manager isn't sure. This is a very common question because the PSLF application is like an employment verification. So someone needs to vouch for you to make sure that the information that you provided about your employment is accurate. Now, there is a common misconception that there is, some person in every organization who is this, designated authorized official, and it's just one person and they've been picked especially for this and no one else can do it. But that's simply not true. Anyone who has access to employment records and can review them is allowed to sign a PSLF application. And when you think about the PSLF application, I want you to remember it's just a job verification. It does not have any information about your loans. All it is your personally identifying information and then a few questions about the nature of your employment. Was the employment full-time, or how many hours on average did you work per week? The organization that you worked for, an organizational contact, and that contact person needs to sign the form attesting to the validity of what you've said. So they just want to make sure that you're telling the truth. Now, some organizations have had enough PSLF requests that at this point they have identified a person that they want to be the one that signs these forms. But if you cannot find that person, that designated official, just think back to this definition of what it means to be an authorized official. Any person within the organization who has access to employee records and can review those records, they can sign the PSLF application. So a common place to go for verification of these forms is human resources, payroll, and in other cases, people might ask their direct supervisor or a departmental payroll representative within their unit. The point is, it's not just that only one person within an organization can sign it. Now, some organizations have come up with a policy that does identify one person, and they probably prefer for that person to be the one that completes the forms. But if you are in a situation where there isn't a clearly identifiable person, I would probably start out with your direct supervisor or human resources, so you can find a person who's responsible for job verifications and see if they would also take on this responsibility. So for those of you who are looking to find someone who can sign the PSLF application, I wish you luck, and just know that odds are you're going to find someone who's going to be able to do it based on the definition of an authorized official from the Department of Education. All right, let's move on to question number 2. And that question is, I am about to pay off an old loan from Navient. Should I consolidate everything else? So this is one of those questions where I definitely need some more information, but my initial thought is don't pay off the oldest loan. Like from the way that the question was sent in, it sounds like the person has one really old loan that's still with Navient, and then they have direct loans that were borrowed later. And the balance on the Navient loan is super low because they've had that loan for the longest time. So they're thinking about paying off this loan from Navient very quickly, and then I guess focusing on the other loans or consolidating the other loans. And my initial thought is don't pay off that Navient loan just yet. The reason why I say that is because we are in this period called the IDR Adjustment. During the IDR Adjustment, when older loans are consolidated through studendaid.gov with newer loans, the combined, those loans, the new portfolio of that consolidated loan can be given credit for the amount of time in repayment that's attached to the oldest loan in the portfolio. So for example, if I took out loans in 2005 and then I took out another set of loans in 2018, under normal circumstances, when it comes to cancellation, these two sets of loans would be on two different clocks in terms of repayment and prospects for cancellation. The oldest loan would have the most progress in terms of getting credit toward cancellation, and those newer loans would have a longer time to go until they would become eligible for cancellation. But during this IDR adjustment period, those 2005 loans could be combined with the 2018 loans. And that new loan, let's say it dispersed this year, 2024, the history of the oldest loan in the portfolio, or the loan in the portfolio that has the most repayment history, that history would be applied to the entire consolidation loan. So that means that all of that debt put together with a new disbursement date of 2024 could be credited with history going back, as far as the date that that 2005 loan entered repayment. Now, when it comes to income-driven repayment, it's possible for people to have debt canceled after they've been in repayment for 20 years, and for others, it's a standard of 25 years. But when you take those older loans and the new loans and combine them together during this special period, you benefit from the history of the oldest loan. So for this person, I responded to the initial query and I need more information, but the bottom line is, don't pay off that Navient loan just yet. We want to see if we can consolidate those loans, if that would make sense for you. Consolidating those loans, again, we get the benefit of having the entire consolidation loan tap into the history that's associated with the oldest loan in the portfolio. And the deadline to consolidate and receive that greatest benefit is April 30th of 2024. For months, you heard us talking about December 31st, 2023, telling people to go to studendaid.gov, make sure you consolidate so that you can get the greatest benefit from this adjustment. But that deadline was extended from December 31st of 2023 to April 30th of 2024. So we have more months to work with and more time for more people to get into the pipeline, and consolidation is a way for many people to speed up the pace of cancellation, especially on loans that have been taken out most recently. All right, so let's move on to the next question. That question is coming from a faculty member. It says, I am an adjunct. Do I need a separate PSLF application for every semester? This is a great question. And like many of these questions, I have to say it depends. The reason it depends is because you could be an adjunct, and let's say you have an even course load for the fall and the spring, and you're teaching 9 credits. 9 credits is the amount of credits you would need to teach per semester in order to meet that minimum 30-hour per week threshold of average hours worked. So with 9 credits in the fall and the spring, that means that basically from late August or September until May, you have met the requirements to be a full-time employee because you had that 30-hour per week threshold met in both the fall and the spring. So for that, you could do one PSLF application for that continuous period, the fall and the spring semester. But some people have uneven course loads. In one semester, maybe they're teaching 9 credits. Another semester, maybe they're teaching 6. 6 would not be enough to meet that minimum threshold of 30 hours per week, but perhaps they were teaching another 3-credit course in another institution. That could push them up to the 30-hour mark. So it really depends on what your teaching load is consisting of as an adjunct. It also depends on which academic terms you teach. So some schools might say, if your load is even and you teach with us every year, all throughout the year, we'll just give you one application, and the start date of the employment will be when you first joined the institution in that 30-hour per week capacity. So one form might cover you for several years. But if you've had uneven loads, if you have taken breaks, for one semester here or there, some schools might ask you to submit a form for the different stints of employment because there were gaps in between. I think a lot of this really comes down to the institutional policy. I'm thinking about one adjunct faculty member in particular who recently had her PSLF application approved for, I think, about $25,000 after a long process. We had actually filled out individual PSLF applications for each semester for an 8-year period. So that's like 16 PSLF applications because there were different institutions involved. Sometimes there was a gap involved between semesters, or sometimes there were semesters where the teaching load wasn't the same in both semesters at the same institution. So it was very tedious. And in one of those instances, an HR person came back and said, look, your start date was this, this is the date we're going to go with. You've been here long enough, and you've been full-time most of the time, and you also took on additional responsibilities outside of just teaching. And so they signed off on that. And the person was also teaching part-time at other institutions. So they definitely had the 30 hours. But it really came down to how the institution itself wanted to treat the verification of this particular faculty member's employment. So I would reach out to perhaps your department chair to ask if they have any insight about how those forms are completed. And if they direct you to HR, then you'll know you need to take your concern to human resources to see how they would like to proceed based on your contract history of employment. Okay, let's move on to the next question. And that question, I can relate to this one. The question is, I got 2 PSLF letters from MOHELA with the same date. Do they mean the same thing? And I actually have my letters nearby because I wanted to look at them while I'm answering this question. So both of my letters are dated actually October 26th. So I know I'm not the only one who's going through this issue. One of them has like a big, bold, all caps message that says, we have reviewed your request for public service loan forgiveness. And the other one doesn't have that header, but the first sentence is, we have reviewed your public service loan forgiveness and temporary expanded PSLF certification and application form. And both of these letters basically say, we've counted up your payments and we're sharing the results with you. In both of my letters, the actual payment counts are the same. And they also show, one of them shows the employers, the other one does not show the employers, but the payment count that's included in both letters is the same. So I'm not sure for the reason of receiving 2 letters that relay pretty much the same information, one that has employers, one that doesn't. But if the information is the same, then there's no reason for you to worry about the fact that you received 2 letters from MOHELA with very, very similar content and also with the same date on them. The idea is, it's good news because you're getting a payment count. If you receive a payment count, you want to make sure that you're taking a look at those columns for eligible payments and qualifying payments. A payment that is eligible means that's a period that could convert to a qualifying payment if you had the employment during that period. A qualifying payment is a payment for which your employment has already been verified. So I'll use the example of my letter again. My letter says that I have 61 eligible payments. So that means that out of all my repayment history, about 5 years worth of it could count toward PSLF if I can document that I was employed for a qualifying employer for all 61 of those months. Unfortunately, I was an independent contractor. I worked for government organizations and for 501c3 nonprofit organizations, but my employment was through my own for-profit consulting practice. So because of that pay structure, most of that time will not count toward public service loan forgiveness. Now, when I look at the qualifying payment count, I have 2. And that is accurate because at the time that I submitted the application, I had just completed 2 months of being an official employee of the Maryland Center for Collegiate Financial Wellness, which, by the way, is a 501c3 tax-exempt organization. So for me, the count is accurate. 61 eligible payments, 2 of them are qualifying. If you know that you have had a career in public service, always working for government agencies or nonprofit organizations, and you see a gap in your payments like that, a significant gap, then that's when you need to take it a step further and go to MOHELA.com so that you can look at the list of employers that they have verified. Now, one of the letters that I received did list my employer. So if you get that letter, you'll be able to see which employers they have verified your employment with and the period for which they have verified your employment. And if you look at that letter and you see that an employer is missing, that lets you know you need to reach out to MOHELA. If you previously submitted a form to find out where that form is, or you need to resubmit the form to make sure that they document that work history. Just keep in mind that there are a lot of moving parts here in the space of student aid in general, not just student loans. And there are also some moving parts within MOHELA. They are transitioning to a new, I think, service or platform. So there may be some things that you see online when you're in MOHELA.com that don't look the way that they used to, or you might not see everything that you are looking for. So just keep in mind that, again, lots of moving parts. If you know that you did what you were supposed to do and submitted a PSLF application, you can go to MOHELA.com, see what you can find there. And if you don't see everything that you're looking for, please do give them a call so that you can get some clarification on where your documents are and any next steps you might need to take to make sure that you are getting all credit possible for your employment history, because that employment history makes the difference between a period being eligible and a period actually counting as qualifying toward the 120 payments you need to be approved for PSLF. All right, let's move on to our next question. All right, the question is, I got a statement that lists my loan status as REPAY. Does that mean I'm enrolled in SAVE? This is a really good question because SAVE is actually an updated version of an existing repayment plan called REPAY, which stands for Revised Pay As You Earn. So when you get your statement and you see loan status on it, sometimes you'll see the word REPAY. In other cases, when you look online at studendaid.gov, you'll see a status that says in repayment. But I think that at the heart of this question is that the person is looking for REPAY, that other pre-existing income-driven repayment plan, Revised Pay As You Earn. People who were previously enrolled in REPAY were supposed to be transitioned over to SAVE. So when you see a status that says REPAY, I can see how that would make a person wonder, well, does that mean I'm enrolled in income-based repayment or an income-driven repayment plan that will eventually be transitioned over to SAVE? And the answer is no. The loan status is not the same thing as the loan's repayment plan. The loan status lets you know if a loan is in deferment, in default, in a grace period, in repayment, or in a forbearance. That lets you know what kind of space the loan is in terms of whether payments have to be made right now. The actual name of the repayment plan is something different. You might see standard, graduated, extended fixed, extended graduated, income-based repayment, income contingent repayment, revised pay as you earn, saving on a valuable education. There are lots and lots of repayment plans that are out there. But when you're looking at the loan status, that is not going to tell you which repayment plan you're enrolled in. That's just letting you know your loans are in repayment. So your servicer is expecting you to make payments now because your loan is officially in repayment. To find out which repayment plan you're enrolled in, there are two places you could look. You could go to studendaid.gov, and once you log in, you want to look at the loan details. And for each loan, you can see the servicer as well as the repayment plan that you're enrolled in. You could also go to your servicer's online platform, and for each loan, take a look at the repayment plan that you are enrolled in. But bottom line here is a status of repay has nothing to do with the actual repayment plan you're enrolled in. It just means that you're supposed to be making payments on this loan. Okay, let's move on to the next question. All right, this question says, I'm in graduate school and I have a disbursement coming in January. Can I consolidate while in school for the IDR adjustment? Now, I must confess, this is an extremely condensed version of this question. The full question is here. It says, I'm in my final semester of a graduate nursing program and will graduate in May of 2024. I have only direct undergraduate and graduate federal loans with no grad plus loans. I was able to have the in-school status waived for my undergrad direct federal loans, and my PSLF count is approximately 40 months on my undergraduate loans. I have approximately 2.5 years of direct federal graduate loans, which currently have the in-school deferment status. It seems like current graduating students just missed the deadlines to leverage consolidation and IDR waiver adjustment. I would like to consolidate my undergrad and grad direct loans so that the IDR waiver adjustment would apply the existing 40-month payment count to my full undergrad and graduate loan balance. Is there any way to accomplish this with the current IDR deadline of April 30th, 2024? Same question, if the deadline is extended to June or July of 2024. Is it possible to get my graduate loans out of in-school deferment before my graduation date? Or worse, some waiting period after my graduation date? I received my final semester's disbursement in January of 2024. All right, so that's a loaded question. But the core of it is, if a person is in graduate school, can they consolidate their graduate school loans with their undergraduate loans to take advantage of this IDR adjustment? Because by combining those loans together, the current graduate school loans would get the benefit of the history attached to those undergraduate loans. And the history that the person mentioned was 40 months of credit toward PSLF. So immediately upon consolidation, after the payment counts are tabulated, those graduate school loans would gain at least 40 months of history. That's the motivation for possibly consolidating. Now, in this case, the nuance here is the type of loans that have been borrowed. If the loans are direct, unsubsidized loans for graduate students, those loans have an in-school status that cannot be avoided. If the loans were graduate plus loans have an in-school deferment status. That status is one that you can opt out of. And this is a reason why some people are declining to take any direct unsubsidized loans for graduate students, and they're opting to take the graduate plus loan because they can opt out of that in-school deferment and immediately start to earn credit toward repayment while having a very low payment for most people. So in this case, the way the question or the way that this submission reads is that this person does not have graduate plus loans. Instead, they have direct unsubsidized loans. Since direct unsubsidized loans have an in-school status that cannot be avoided, in this situation, it does not appear that consolidation would benefit them at all. It would not speed up the pace of those graduate school loans because they are in a status that you cannot get around. An in-school deferment is something that you can get out of. In-school status is something different. That's like a mandatory time where you're in school, so the loans have not entered repayment yet. With grad plus loans, you have the option to opt out of the deferment of payments on that graduate plus loan because technically grad plus loans have no grace period. So in this case, from what I've read from that question, I don't think consolidation would be beneficial because the consolidation application would probably be denied due to the status of those loans that are currently in school. If the borrower had grad plus loans only, then I would say, okay, opt out of the in-school deferment. Once those grad plus loans are officially out of the deferment, then we consolidate those with the undergraduate loans, and the new consolidation loan would get credit for at least the 40 months that are attached to the older undergraduate loans. So to the borrower who submitted this question, thank you so much. I know they mentioned that they watched the YouTube videos. I am going to email you back. We probably need to look at this in detail just to make sure that I've got the loan types right, because that difference between taking direct unsubsidized loans and graduate plus loans is what this answer hinges on, whether or not consolidation would be beneficial or whether the application would even be approved. So more to come. And thank you so much for submitting so much detail along with that question. All right, let's move on to the next question, please. All right, this question, it says, I have a qualifying payment count of 137. Does it mean what I think it means? So this is a message that actually came in over the weekend, and I was really happy to be able to let this borrower know, yes, it means exactly what you think it means. It means that you have satisfied the requirements for public service loan forgiveness. A qualifying payment count is the number of months where you have both the employment history and the loan status history to meet 120 months, because PSLF takes a minimum of 120 months of qualifying payments. Now, to have a payment count of 137 means not only did you meet the requirements, you exceeded them by 17 months. Since this borrower now has a qualifying payment count of 137, the next thing we're going to do is wait for them to get the official congratulations. You know, we reviewed your account and you've been approved for public service loan forgiveness. And that's a letter that will come from MOHELA. For those of you who are logging in and seeing that you have a qualifying payment count of over 120 and are wondering, well, why hasn't the debt been discharged yet? It's not, at least from what I have seen in my years doing this, it's not an automatic kind of thing. It's not that as soon as you have been documented to have hit that 120, the loans get canceled. I don't know if it's a batch process or something that picks up everybody who reaches 120 in a certain month. I don't know. But I can tell you it's not automatic. So for this person, you log in, you see a count of 137. You've obviously exceeded the requirements for public service loan forgiveness, but the debt is still there because it has not been discharged yet. So reaching 120 is the milestone that lets us know that a discharge is in your future, but the actual processing of that discharge can take some time after you've reached 120. For most people, I've seen the congratulations letter come within 1 to 2 months of them seeing a qualifying payment count that exceeds 120. For others, it has taken several months. Several months. But for most people, it's usually 1 to 2 months, and they get their congratulations letter. That letter will spell out exactly how much the balance was on the loans that have been forgiven, and it will explain that the debt has been discharged. So congratulations to this borrower. I'm extremely happy for you. And when you get your congratulations letter, please do circle back so that we can make sure that we officially have you in our victory tally, which I must say is now sitting at more than $12 million worth of a cancellation, the vast majority of which is for borrowers who were approved for public service loan forgiveness. So congrats. All right, time for our next question. Or let me check and see if that was the last question. All right, so looks like we have answered all the questions for tonight, and that happened pretty quickly because we're only about 30 minutes into this, but all good. So if you do have any questions, please do be sure that you submit them or put them in the comments so that I can take a look. And I'm going to check the comments now on Facebook just to see if we have any fresh questions. None at the moment, but I do see that we have some people who have joined us for the broadcast. I just want to say thank you so much for joining us for the January 10th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. On a personal note, I do want to share that January 10th is my mother's birthday. And this year she would have been celebrating 76 years old. So definitely missing her, but definitely moved forward with this broadcast this evening because public service was something that was very important to her. She was an accountant and she often offered her services to people for free to help them, get out of periods where maybe they hadn't filed taxes in several years, or if they had a complex problem and weren't aware of how to solve it. She was always there to help them and would give plenty of her time sharing her expertise. So being here to offer office hours, just feels like a good way to honor her memory. And now I see that my cousin Joyce has joined. Joyce, thank you so much for joining office hours. I appreciate you being here. I appreciate you listening to me and sending a big hug your way. All right, let's see if we have any other comments or questions. Right now, things are looking pretty quiet. I do have another question that actually came up, or a concern maybe that came up during a meeting with an individual client today. And the issue was about confirming the status of a PSLF application. So the employee knew that they had completed a PSLF application for their current employer. But when we logged into studendaid.gov to take a look at their activity, in the My Activities section, you can see your PSLF applications and whether the forms have been signed by the employer. And if they have been signed by the employer, that means that they're on their way or they've been sent to MOHELA. So when the borrower logged into studendaid.gov, we were unable to see the PSLF application for their current employer. Try to work around, which was to go to the PSLF help tool at studendaid.gov/PSLF and start a new PSLF application. Because if you've already completed one for an employer that you've listed as your current employer at the time you completed the form, when you go into the PSLF help tool, usually it will ask you, do you still work for? And then it will say, it will list that employer that was on the last form you completed. In this case, when we got to that screen, it was blank. It said you haven't added any employers. And that was strange because the employee really was very certain that they had completed the form and actually went back and shared screenshots with me of the completed, the section within studendaid.gov on My Activity that showed that they had completed the form and listed a person from their organization who was the authorizing official. All of that was there on the screenshot. So we knew that they completed this form, but for some reason, it was not showing up within studendaid.gov. I have no idea why it was not showing up in studendaid.gov, but we do know that the application was completed. So we're going to wait to see if they hear from MOHELA and if their loans are transferred from their current servicer to MOHELA, because if that happens, we know that a PSLF application has been received by MOHELA and the employer at least has been verified as one that qualifies for public service loan forgiveness. So I'd say all of that to say that there's a lot going on with federal student aid right now. We're also in a period where the FAFSA, that's the free application for federal student aid, had a soft launch at the very end of December. And, that is ongoing. The FAFSA being made available to all. Sometimes it's taken down for them to observe or fix problems that arise. But remember, all of this is studendaid.gov. So the platform that we're logging into to see your loans and these applications, that's also the platform where the FAFSA is. So there are a lot of moving parts here, a lot of improvements that are being implemented. And sometimes while that system is being altered, it may affect your experiences as an end user. There may be some things that you saw earlier in the day that you're not seeing tonight. My advice to you is give it some time, come back, and hopefully you will find exactly what it is you're looking for. But hang in there. For that employee, kudos to them for taking the screenshots because that is our proof that PSLF application for the current employer had been submitted. All right, I'm going to take a look and see if we have any additional questions. I see none at the moment. I did not share at the start of this broadcast about our current events. Right now, we are deep into our work of the No More O Less project, which we sometimes refer to as KMOL, which is the financial wellness initiative specifically for pre-K through 12th grade educators in Prince George's County and Northeast Baltimore City. We have had events at multiple schools in Prince George's County, and we're heading into some events in Baltimore City and reaching additional schools in Prince George's County in the coming weeks. And in addition to that work, I just wanted to give a shout out to the University of Maryland Eastern Shore and just share some Hawk pride. We had an event that was presented by their financial aid office as a benefit to the campus community. And we've received some great feedback, and we've been able to help people get on track for public service loan forgiveness. And hopefully we will have some victories to celebrate in the coming months as a result of that engagement. So kudos to the University of Maryland Eastern Shore. We appreciate you. Can't wait to visit campus again. And next time, I hope that we're able to celebrate with each other in person. I do want to say, and I want to thank Melanie Mason, who's our Director of Programs and Administration, who is manning production for us tonight. Take a look at the comment that she dropped in the chat. That's, of course, thank you to the University of Maryland Eastern Shore for joining our MDTAPS campaign. That stands for Maryland Tell a Public Servant. If you would like to bring McFew to your institution to reach your employees or the surrounding community, you can contact our Director of Campus and Community Partnerships. His name is Jason Calhoun, and his email address has been provided in the comments. Thank you so much, Melanie, for sharing that information. All right, I'm going to check one more time to see if we have any questions that have been submitted from borrowers. I don't see any. Actually, I've got one more question. One question that popped up. One, it's about the public service loan forgiveness application. We had a public servant who completed the application and chose the electronic signature option. And the electronic signature option allows the PSLF application to be sent to the authorized official for verification via DocuSign. So in this case, the person submitted a form with the electronic signature option, but the person who verified the form downloaded it, completed the information, and then emailed it back to them instead of using DocuSign to actually approve the document. So the question was, what does the borrower need to do with that form now that it's been sent back to them? Can they upload it through studendaid.gov, or do they need to send it to MOHELA? And the answer is the form must be sent to MOHELA. If you have a PDF or a printed file of the PSLF application, you have to send it to MOHELA yourself. You can do that by mailing it to them. The address is actually listed within the PSLF application. You could fax it to them at the number that's listed in that PSLF application. And if MOHELA is your existing servicer, you could log into their online portal at mohela.com, and you can upload that document through their document upload option once you've logged in. But if MOHELA is not your current servicer, you would need to mail that form in or fax it to them. This is why I really want more employers to know about the DocuSign option and how they can use it to make sure that this process is 100% electronic. And I just want to share a few of the advantages or the benefits of using DocuSign to verify public service loan forgiveness applications. The first one is that it is a much safer way to protect your employees' personal identifying information. The PSLF application is one that is a job verification. So it doesn't have any information about loans, but it has personally identifying information about the borrower, and it has information about their employment. And the person who is an authorized official can use DocuSign to basically check the boxes for the items that need to be verified. And if they do this via DocuSign, That document is handled by the Department of Education, who then makes sure that the document gets to MOHELA. This is a way that you don't have to worry about printing out a form with someone's personally identifying information, sending it to them via email, having them send it somewhere else via email potentially. This keeps things so that the borrower never has to touch that form again, and you as the authorized official don't have to download it, print it, or anything else. You can just use DocuSign to verify it without exposing their personal, or running the risk of exposing their personal identifying information to anyone else. The second thing is that it makes certain that there are errors that you can't make. I wish I had a better way that I could phrase that, but it basically reduces the opportunity for clerical errors. With the electronic signature, much of the form has already been populated. Of course, the borrower's personal information is there, but the EIN has been used to populate the information about the employer, including the type of qualifying organization it is, whether it's a government agency or a tax-exempt organization. By using the electronic form to complete those details, you eliminate the possibility that a person is printing out a blank form and perhaps inadvertently checking the wrong box and causing an application to be rejected. You can't check the wrong box when it comes to the online version. So you really reduce the window of opportunity to make mistakes that could cause a form to be rejected. And beyond, protecting personally identifying information and reducing the opportunity for errors, you also are just helping things move along faster. DocuSign, I can tell you, is faster. I have verified employment, and it may have taken me 3 minutes, if that. And also from the processing side, what we're seeing is that the forms that are submitted electronically are counted faster than the forms that are sent in by mail, by fax, or even uploaded through MOHELA's website. So I think those are 3 strong reasons why employers should use the electronic signature option to make sure that PSLF applications are completed 100% through DocuSign. And if you have any questions about that, if you're an employer and you want more information, I'd encourage you to visit studendaid.gov and just look at the resources that are out there related to the public service loan forgiveness application. And you can also reach out to us at the center at mccfw.org/contact. There's a contact form there where you can submit your questions, and we'll be sure that we get back to you. And you might just find your question answered on the next edition of Office Hours. All right, I'm going to pause for a moment to see if I have any questions that have come in to me. And I don't see any more. Okay, so it is about 7:44 at this point. If we have no further questions, I'm going to go ahead and close out this edition of Office Hours. So this has been the January 10th, 2024 edition of Office Hours, the free semi-monthly virtual student loan clinic presented by the Maryland Center for Collegiate Financial Wellness. My name is Dr. Tisa Silver-Kennedy, and I'm the founder and executive director of the center. I thank you so much for your engagement. I see the comments, some of the likes and loves. I really appreciate everyone who is engaged with the center, whether that was by sending a question, liking, subscribing, all of that. I see my uncle, my mom's baby brother jumped on and said, great job. Thank you so much, Uncle Rory. I appreciate you for being here. I definitely thought about you, on this day. So thank you so much for joining me again, Uncle Rory. All right. So now that we have, I think, cleared the comments and the questions, I'm going to go ahead and sign off. You can join us again for Office Hours on January the 24th, 2024. If you have any questions that come up between now and then, please do visit us at mccfw.org/contact to submit your questions, and we will either get back to you via email or we'll make a video answering your question in the next edition of Office Hours. Oh, I see another comment that popped up. Dr. Bridget Bing, thank you so much for joining us. You're returning. I appreciate you coming back after the last one. So thank you so much for joining us. And I appreciate your comment of thanks for providing this information. It's my pleasure, truly. And like I said, I appreciate the engagement, and I just hope that more people will send us questions so that we can provide answers that are clear and actionable. Because if one person has them and is willing to ask those questions, we know that there are many more that have the same questions and concerns in mind. So thank you again for joining us for this edition of Office Hours. Until next time, be well.